Hello, everybody, and welcome to the session today. We are about to start in just 1 second, okay? Just give me one moment. And we are going to be ready to start. That's it. I'm ready. Let's begin. Welcome, everybody. Today is May 25, 2023. And this is our SMARTT Tiger Live session. SMARTT means Special Market Analysis Report for Tiger Traders. So we're going to approach the markets from a smart way, and we're going to do some market analysis. We're going to find some trading opportunities. We'll put together some options plays that could be, reassessed right as the market opens in a couple of hours' time if you are an options trader. And hopefully the session will be useful to you. Before we get started, I am highlighting on the upper left side of the screen our financial disclaimer. Please read it carefully. This is important information. I guess a financial disclaimer is nothing new to you, but it doesn't mean that you don't have to read it. I am actually counting on you all to read it completely, please. This is, again, important, especially if you're new to trading. Again, sometimes the concept of risk is not well understood, and it's important that everybody understand that there is risk in the financial markets. Trade with UFOs is our social media handle. So YouTube, Twitter, Facebook, Instagram, TikTok, etc. So you can find us, Trade with UFOs, and you can take a look at what we do. If you are new to what we do, and if you have never been in a session with me, my name is Jose Blasco. It is my pleasure to conduct the session today. You can also see on the screen my email address in case you have questions. Maybe you are watching this recorded and you may have questions and you want to know how to get your answers. So you can just email me directly. Maybe you are attending live, and if you are attending live, I just wanted to point out the fact that I am watching you. I am watching the chat box on YouTube, as well as I am watching the chat box on the Tiger Brokers mobile app, meaning that if you have questions, certainly do not be shy. Type the questions in the chat box so I can give you answers real time, and hopefully we make this session count. Instead of being a little bit of a monologue, we can have a conversation, an interaction between the two of us, and that way the session becomes richer for you, and hopefully it will serve you better. So please do not be shy, and one quick way to check that is just type a quick hello. I think it's a great friendly way to begin the session with a quick hello. Go for it. Anyway, so with that said, let's begin. We're gonna look at a quick introduction. Again, just in case you are new to what I do, to what we do, I'll have a 30-second presentation. From there, we'll move into key headlines, what's going on out there in a very pragmatic, extremely pragmatic manner. From there, we'll look for options opportunities in the market real time. So I'll put some trades together. Finally, we'll do our complete SMARTT market commentary. And I have a bonus for you. And questions and answers, you can do that anytime, okay? So waiting for your hello messages on the chat box, guys. Do not be shy. Anyway, my name is Jose Blasco. I am a trader. I trade all assets. If I was to pick one, which is my favorite, probably I would say is options. Again, I always kind of joke, even though it's serious, and I say options give you options. And it's true, because you could combine options contracts in a very diverse, collection of manners. And this allows you to create all sorts of spreads and opportunities, directional, non-directional, volatility plays, earnings plays, you name it, which is not something you can do with other assets where you are limited to be directional, long or short, which nothing wrong with that, obviously. But again, with options, you take it to the next level. So I love that. And apart from that, I have a few other hobbies in life. Hobbies, to use an informal word, even though this is very serious stuff. Technology is something I love. We've developed technology in our company, technology which is patented, by the way, that we use for trading. So you will see me utilize some of it today, even though you don't need to utilize the same technology I use to trade. The session I will conduct today will serve you no matter what you do when you trade. I will certainly apply options in a way that could be understandable for everybody. And no matter if you use the same technologies I do or not, you will be able to follow and learn from today and so on. Talking about learning, we are proud authors of our Mystery to Mastery series book. proud in the sense that we got #1 new release in 3 categories: online trading, risk management, foreign exchange. This is a forex trading book, even though it serves well all sort of traders, including options traders, including futures traders, including stock traders, because in the end, whatever you trade is a currency. So while you could trade the currencies, you can certainly apply what you learn in this book to other markets as well, okay? As a company, we are predictive, but our website, it's not predictive. Our website is Trade with UFOs, right here, okay? This is our website. And what are the UFOs? Well, if you never heard that term before, the UFOs are those beautiful flying saucers that you will see later on my real-time charts, because I will use a few slides, but then I will move to the real-time markets. And those flying saucers represent on-field orders. That's the meaning of UFO, on-field orders to either buy or sell. And therefore, those price points could certainly and very powerfully be used for setting entries or exits or both, depending on your trading methods and the timeframes that you use and so on. The technology is intelligent. We live in the era of intelligent technology, isn't it? And therefore, you could apply UFOs to all markets, all timeframes. So it becomes extremely powerful. Anyway, you'll see that later on. So now, what's going on out there in the world? Okay, from a headlines point of view, you may have heard me say that before. I am extremely pragmatic. So we could make a very long list of headlines, where the majority of them is just, almost professional gossip of the market. In this case, I'm not going to focus on gossip. I'm going to focus on events or facts that are objectively potentially very powerful, such as things that are happening in this case for a while now, like Russia, Ukraine, or the US-China tensions, which you will say, okay, that's nothing new. Yeah, it's nothing new. But if something new happens in that domain, the markets are going to move crazy. So that's why it's here in the list. Okay, I'm not pointing at things that are new but may not be impactful. I'm pointing at things that are impactful, even though we may need to wait for a reaction or a change. Like, for example, if the Russia-Ukraine war remains the way it is, so probably the markets will not react too much to it, because the same story is happening for a while now, just like many other wars, unfortunately, that are happening in other places in the world as well. But if something was to happen that is new, I don't know, maybe a new part of the country that has been conquered or fought back or whatever. So those kind of things are the things that we should be watching in the news, because that may add volatility in the marketplace, and this is something for us to keep in mind. US fighting inflation is nothing new, still hot, and a little bit of a new element that comes to the equation is the debt ceiling in the US, which in a way it's kind of representing or referring to kind of the same thing, which in the end is the US providing a healthy economy environment, or they are in trouble, because they are leading when it comes to financial markets in the world. The US markets are the largest in the world, the most liquid markets in the world, the most sophisticated and evolved markets in the world. And therefore, if something happens there, very good or very bad, everywhere in the world will either enjoy or suffer the consequences. So those are things to watch. Again, US fighting inflation, that's interest rates in the US, that's the CPI, PPI numbers that are reported once per month. But also in recent times, we got this conversation about the debt ceiling, how high or how much higher they're going to raise the ceiling. Is it crazy? Is it not crazy? Is it approved? Is it not passed? All of those are the news that you should be watching, okay? And finally, then now, instead of looking at macroeconomics, if we were to look at specific reports that impact specific markets, in this case, specific stocks. So we are talking about 367 earnings reports today, where out of 367, I have picked 3 of them, which is Autodesk, Best Buy, and Ralph Lauren, as the 3 that potentially are the most relevant for today. Of course, the most relevant to you are the ones that represent stocks that you have in your portfolio. So let's say there is stock XYZ that I don't have in my list, but you happen to own shares. Well, you better be aware of when the earnings reports are going to happen, because often earnings reports imply gaps. And if the gap is in your favor, congratulations. But if the gap is against you, then it could be a very big problem, isn't it? So again, this is something for you to keep in mind, yeah, something for you to know. Good. So with all of this said, we're gonna now jump into real-time charts. Okay, I'm gonna move instead of looking at slides. I will come back to slides later, but before I'm gonna move into the trading platform. Let me come here. Here we go. So this is top. Top is our predictive options planner. So if I zoom in, you can see TOP. We call it top. Okay, the predictive options planner. This is not a trading platform for you to execute the trades. This is a trading platform for you to do your market analytics, your planning of the options trades. As you can see, this is a software which is specialized in options trading. So while you could do your planning manually, maybe you are using the Tiger Brokers app to do that, nothing wrong with that. You will see me take things to the next level. And if you are very serious about trading, probably you will like very much what I'm about to show today. Okay. So you can find more information about this in our website, or if you want to email me, as I said before, feel free to do so. By the way, everybody has been quite quiet so far. So I just want to invite you again to connect, to say hello on the chat box, and maybe type your name, maybe, type how long have you been trading options, or if you never traded options before, give me a little bit of feedback so I know better how to conduct the session, so I am adapted to all of you depending on where you are in your trading journeys, okay? So share with me a little bit more about yourself. That would be great, and please do not be shy. Just remember that all of us, that of course applies to me too, at some point in our life, we were students of trading, we were new to the markets, so there is no point of being shy. Because we all know what is it to learn something that you didn't know before you got into trading. Okay, so that in case you are new to trading. I am also, of course, assuming that some of you may be very experienced, and if that's the case, just go for it with those very advanced questions. Happy to take them and happy to give you answers. Okay, great. So what are we going to do today? Well, today we're going to be looking at Walmart. Okay, I'm going to plan 2 options trades for Walmart. Okay, instead of 1, I'm going to go for 2 options trades. Okay, and what I'm going to do, just to be well organized, the 2 options trades I'm going to provide you for Walmart. One, it's going to be a debit spread. Okay, so here it says MU, so I'm going to change this to Walmart, and I need to customize the whole thing. So this is going to be one trade I want to plan. It's going to be a debit spread. And the other one I want to do a bit more relaxed type of trade is going to be a naked put type of trade, which depending on your account and the way on how you want to take this trade, it could be a naked put or it could be a cash secured put, which that would make the trade to be a bit safer. So I'm gonna plan on both of those trades with Walmart. In a moment I will expand those sticky notes, fill them in, explain everything that I'm doing so you guys can follow and you can practice those trades if you would like to. Taking or not the trade, of course, is your decision. This is not financial advice, as you know. Using paper money, real capital, that's your decision. Using a large size or a small size, that's your decision too. So I'm just here guiding you on the process from an educational standpoint on how to put an options trade together. And hopefully that helps. But of course, we are all professional here. We're all serious about trading. We're all responsible for our actions, okay? So what do we have? First of all, I got a chart of Walmart on the daily time frame. So why am I interested in Walmart in the first place? Well, let me take a look at not only Walmart, but let me take a look at here. In the longer term, let me take a look at the strength of that particular stock. And this is interesting because I got a white screen there. So this is looking like I have an internet problem. I may need to close the platform and open again. Yep, I think so. I think I have an internet problem, guys. So sorry about that. Oh, now it just loaded as I was closing the platform. Let me log in again. I guess for whatever reason, my internet was very slow. I am logging in again, okay? So just give me a moment and we'll be back online. Okay. Yes, I do see, I'm looking at some of my metrics here. on another computer screen, and I can see there is some issue with my internet connection. Sorry about that. Hopefully you guys hear me well and see me well, and that will not be an issue in the end. But yeah, that is forcing me to do a few changes on my other monitor, and I am about to log in. But give me a moment, guys, because yes, I am having a little issue with a slow internet for whatever reason. Okay. Okay, so it is not letting me do it. I cannot reach the server. Let me try again. So this is the magic of the live sessions, that sometimes you have technical issues. Okay, let me try one more time. And if it's not gonna work, I'm working on my other computer screen. That's why you see me turn my head. Sorry about that. If it's not gonna work, then I'm gonna have another way to approach it. Yes, I believe it will work this time. Yes, I had to reset a couple of things. Okay, please be patient with me, guys. Murphy's Law, I guess. I think I have a slow connection for whatever reason. Fully slow, really, really slow. Okay, so we get Walmart here, and here in the bottom part of the screen, I got this white space, which will be filling in a moment. And basically what I'm gonna see here is I'm gonna see a measurement of the trend on Walmart on the longer time frames. Okay, and as you will see in a moment, that stock is in an uptrend. And therefore, we all know that the trend is your friend and all those things, and therefore buying a stock which is in an uptrend seems to be a smart thing to do. It's still loading here. It's running very slow, so please bear with me today. I guess it's not going to be faster than that. But now, most importantly, as you can see, Walmart has been going down. So going down means it's becoming cheaper, but it's getting into those green UFOs. Okay, and remember, UFO stands for on-field order, right? So there are buy orders in that green region of the chart, which is likely going to push Walmart back higher, which, by the way, is something pretty natural to happen. Knowing that we are dealing with an uptrending market. Okay, on my trend here is not loading. Now, the other thing I wanted to show you, let me see if I can change it and it reacts this time, is that I also wanted to show you the sector. Okay, the sector which is consumer services, even though it's not showing because of my internet issue, the sector which is consumer services is also in an uptrend. And that's very relevant because while stocks are a beautiful asset to trade, especially when you use options, the reality is that stocks are such a small portion of the market. The US market is very large, but is made of around 9,000 stocks. So if you pick one, like Walmart, okay, here we go, it just came out. So you can see it's blue going up. So this is the sector. So if you pick a stock like Walmart, which is an important company, that's still very tiny compared to the size of the market. So if something happens to the market or the sector, that stock is likely going to suffer because stocks by themselves are a very small thing. So having the sector and the industry, what we call the group, okay, which the group is grocery, okay, retail grocery. So both are going up, okay, and the stock is also going up. So that is a very powerful correlation where we know we are dealing with a stock that if the stock does not behave the way we want it to behave, very likely the industry will step in and try to push that stock higher because the whole industry overall is moving higher. So that's a good backup plan to have in case the stock does not behave as expected. Now, apart from that, I want to point at the fact that just a few days ago, we have this little triangle there, which is an Elliott wave turning point. And that Elliott wave turning point suggests that that stock may get to the blue box here all the way on the top. That would be the extreme of the blue box. For you to understand how powerful this is, I would like to show you on the left, I got the SPY ETF, okay? Notice that we got a blue indication on Elliott wave turning point, and notice what happened. It went to the blue box, and from there, turned aggressively in the opposite direction. So those are very relevant price points, and I plan to use the current price point as my entry, and of course, I plan to use the upper blue box as my exit, which exit means target. That's what I'm planning to do, you know, in this particular trade with Walmart. Okay, so if the trade plan is understood, which is we have a reason to go in long because we have a stock in an uptrend that is supported by its industry or group as well as the whole sector overall. On top of that, we got plenty of buy and field orders below price. So if it tries to go down, the buy and field orders are likely going to push it back up, and the industry and the sector as well. So all of this increases the odds for Walmart to move higher sooner than later. And if it comes up and it reaches the blue box, which is located around 155.90 or 155.85, so we plan to take profits there, close the trade, and be happy and go find another trade. So how can I exploit an options play thanks to that trade setup? Okay, and again, feel free to ask questions. If you have any question, both on YouTube or on the mobile app, feel free to type. You know, I'm happy to support you guys. So the way I'm going to do it is I'm going to move to the option send to, and I'm going to send this trade to the strategy builder. So the strategy builder is going to build option spreads for me automatically in a way that are optimized. So notice how the first thing that just happened here is that a calculation is running in the background. And again, this is running slow because of my very slow internet connection today. Not sure what happened. Come on. So the first thing that's going to happen, okay, is that we're going to see a target date pop up here. Okay, and the target date is going to be an anticipation. No one knows the future for sure. Okay, but here we're setting the target date is done automatically as July 5. That means that given the volatility of the stock, given, you know, all sort of statistical measurements and projections into the future, we would expect that, you know, a pretty likely thing to happen is that we would reach that target around July 5, you know, maybe a little before, maybe a little after, but typically it would take at least that amount of time. So now, of course, it may take a little longer because we don't know for sure. This is an estimation, which is a smart one, but it's still an estimation. We don't know the future for sure. And therefore, what we're doing here is that we are giving the trade a little bit of extra time by using the expiration date to be July 21st, which is a few more days than July 5, in case the stock ends up moving like the slowest stock of the year. Okay, so we give ourselves time to get to the target. Of course, this trade is going to profit assuming you're right and the stock goes higher. If the stock does not go higher, then obviously forget about it, okay? But anyway, so what's the trade that we are trying to put in place? We are trying to put in place a trade with Walmart. We are going to be using the expiration date July 21st, 2023. I didn't look at the earnings date yet. Earning date is happening here in August 15. That's going to be the next earning. So August 15, that's the earning date. Okay, and again, I'm going to plan 2 trades on the stock, right? So we have Walmart. So August 15 is the earnings, and the expiration date that we're going to use is July 21st in both cases, okay? So now, now that we know we're going to use July 21st, we have the target date set. Our target price is 155.85, which means that when we get notes, close the trade when Walmart reaches 155.85. Okay, that's the instruction here, right? So exit when we get to 155.85 or above. That's what this means. So that's the plan, right? But the question is, there are so many expiration dates, so many strikes. You know, if I load an option chain and I look at Walmart, okay, and even if I look at only one expiration instead of multiple expiration, if I look at July 21st only, look, if I load all the strikes available, I got so many strikes. So which one do I use? Which option do I buy? Which option do I sell? How do I combine them? The combinations are basically unlimited. You know, you can't really, you know, go crazy trying to find out the best combination. So that's why we use a strategy builder, because the strategy builder is going to help you to first optimize strikes, optimize expiration date, use the strikes with the greatest level of open interest, volume, etc., to get the deltas you need, all of that. And then you can come in here and say, okay, look, let's say I want to raise maximum $300. So out of all these list of possible trades, which ones I am left with? Okay, in this case, it's pretty simple. Actually, it's two. Okay, you are left with two. And then here with the return on investment, I can sort the one that pays me the best, which is 95% return on investment. So now you know that the trade that we're going to do on Walmart is a trade by which you're going to be using July 21st expiration, where you will buy the 150 call. Sorry about that. You will buy the 150 call and you will sell the 160 call. That's the trade that we selected, that if wrong, we're going to lose 289. If right, we're going to make 274, which is 95% return on your investment. Okay, and you're going to lose more than 289. Okay, if you do the trade the way it's described. So let's document this. So what are we going to do? We are going to sell the 160 call and buy the 150 call. That's the trade we are doing. Risk of the trade is maximum 300. Okay. And again, when the market opens in a little less than 2 hours time, of course, you want to reassess the market condition. You want to reassess the whole thing. Let's say the trade makes sense to you and you want to execute the trade. What you will do is buy the 150 call and sell the 160 call that expire on July 21st. And that is your trade. And then if the stock goes down, the most you can lose is 300. And then if the stock goes up, the moment it gets to 155.85, you close the trade for a profit, which is estimated to be 95% of your initial investment. Of course, depending on how much time is going to pass, when you get to your target, you may even make more than that. But based on those estimations, this is what you are expecting to make at this moment in time. Okay, so this is trade number one. And if there is any question out there, certainly happy to take it. Now, what is approach number two? Okay, what is approach number two for this trade? Okay, well, approach number two for this trade is to look at it from a little bit of a, a bit more investor style instead of trader style. And I'm going to look at what we call a 2-day chart, where every candle is 2 days, just to zoom in, I should say zoom out. I'm not going as far as a weekly time frame, but instead of a daily time frame, I'm looking for a 2-day time frame. And notice that on the 2-day time frame, we got very powerful buy on field orders at 145. So maybe what you want to tell me is, okay, you know what? I don't want to take the risk to take the trade now. And yeah, it's likely going to go up, but as an investor, I am willing to wait for the stock to dive deeper. And if the stock comes to 145, now I want it at $2.63 cheaper. Now I want it. How can I make money while I wait for this to happen? Well, one very simple application of options trading would be to sell the 145 put that expires in July 21st. So if you do that, what happens? Well, let's take a look. I'm going to load an option chain. I'm going to look at Walmart July 21st, and I'm going to highlight the strike 145, which is the one I care about. Okay, it's highlighted right here in golden color, and you can see how the premium collected if you sell the 145 put. Okay, we are using puts and we are selling them. We are not buying calls, we are selling puts. So if you sell the 145 put, okay, the premium that seems to be available, it's $2.63. So how much is that? Well, if we do some math, let me bring a calculator. Okay. So if we do some math, here's a calculator. So you're going to make $263, okay, out of trading a stock, which is currently trading a stock that would be put to you at 145. So 263 divided by 145. And this is something that you will make in 57 days, knowing that a whole year is made of 365 years. So if I annualize those 57 days, that is, my friends, 11.6% of return. So this is an annualized 11.6% of return. So in other words, if you're an investor, I mean, of course, the debit spread will make more money, right? Because you make 95% return, but you make 95% return on those $300 of risk. Where here, you are going to make 11.6% return is less, but you're also in a position where in one hand you have less risk because you are not exposed to the move now. You are only exposed to risk if the stock goes down to 145 or below, knowing that the current price of the stock is 147. So you have a buffer from 147 to 145, okay, that in between, really not too much is happening. You are just collecting time decay. And if the stock ends up dropping to 145, so now the stock is put to you, okay, at 145, but to be honest, you get a better price than that because while the stock is put to you at 145, and look at this, while the stock is put to you at 145, you keep $2.63, which is an equivalent purchase price of 142.37. So it's like you're buying the stock at a very cheap price, which as an investor, this is probably something that you appreciate if that is your mindset, your trading style, or investing style, I should say. So I'm giving you two different ways to exploit a potential move on Walmart here. One, which is doing a bull call spread made of buying a call, the 150 call, and selling the 160 call. That's on the right. And on the left, I'm giving you another opportunity, which is to do a little bit of investing style, which is using the same expiration date. Instead of buying a call and selling a call, you would sell the 145 put that is lining up with the UFOs on the chart. So that adds odds in your favor. But all of this, of course, is assuming that you want to take ownership of the stock. And of course, the quantity of puts you sell is reasonable given your account size and your risk management rules. But anyway, hopefully this makes sense. And I'm just going to check on the chat boxes in case there is any question or comment. If there is none, I will just move to the market to do our market analysis, and we will call it the day. But hopefully these two trade demonstration, those two applications of options trading for long-term investors as well as for a bit more active type of traders. Hopefully those applications are useful to you, and they help you collect a few bucks from the market while you are learning how to do that by yourself, and you can do these many times a week, isn't it? Cool. Anyway, so I'm just going to close this, and I'm going to go back first to the slides to point at, I told you I have a bonus for you, isn't it? So I'm going to point at the bonus. The bonus is our AutoClimate. AutoClimate is one of our pieces of technology. I showed you Auto UFOs here on the right. I didn't mention AutoClimate yet, which is the tool I have here, which I'm going to utilize now to do our SMARTT analysis, okay, our analysis of the market the way I explained before. And by the way, you can also have your own AutoClimate on TradingView. You probably also know that TradingView can be connected to Tiger Brokers, and therefore you can execute your trades through Tiger Brokers, but you can do it all from TradingView including your market analysis and loading your charts. So if you go to this link or you just scan this QR code and then you use the coupon code claim number 8, claim 8. So this is going to make it free for you. It's free forever. And that's it. Here's my bonus for you guys. And thanks to Tiger Brokers. So with all of this said, hopefully you got it. And now we're going to do our special market analysis report for Tiger Brokers, for Tiger Traders. And this starts like this. Okay, so we're going to be looking at, first of all, the S&P 500 ETF. On the left side, what do we have? We are in a down climate. Let me zoom in. So the S&P is in a down climate. Now, pay attention to this. This is very relevant. Notice the size of this dot compared to the size of that dot. So the thick dots represent confirmed climates, where the thin dots represent not confirmed. Okay? In other words, it's red color because there is a directional component. If you see the price movement has been going down, and hence the red color. But because it's not confirmed, it's not a thick dot, it's a thin dot, that means that our technology and its intelligence concluded that the way the market is behaving does not imply any statistical advantage, either for the market to continue going lower or continue going higher. So in other words, I would not be surprised to see a very strong move to the upside immediately, or a continuation to the downside as well. Anything could happen, really. If the market continues going down, a move of 3 days is a normal thing to happen. So far, we got 1 day. So a couple more days on the way down, it's certainly doable. But the fact that the climate is not confirmed tells us that we may go up immediately. Okay, so something for us to watch. To be honest, when looking at the futures market, which is what I have on the right, I got a 34-minute time frame of the S&P futures. So we can see how the S&P futures are going to open up 0.6% higher from the yesterday close. So we may end up having a gap up. And by the way, all technical analysts know that this is a bullish candle. So if we have a breakout of the high from yesterday high, we may be set for a move to the upside, a change of climate. And if the climate changes, statistics suggest we're going to be on a move to the upside for 6 days in a row. Now, this is technical analysis on the chart using advanced tools, intelligent tools. There is something else I would like to mention to you here, which is the fact that if we look at the SPY ETF, we also get to see green UFOs. So in other words, if the market gaps up and then aggressively goes back down, okay, and looks like it's going to break yesterday's low, everybody's going to get in panic mode. But if the market breaks yesterday's low, it's going to get into a green UFO, and therefore from there it's very likely going to continue and resume to the upside. So we may have a sideways day, unless it's a gap and run type of move, market gaps and keeps going. Unless this is the type of day, if the market collapses and goes below yesterday's low, careful with not falling into some sort of a trap, because a green UFO is waiting here to reverse the market and push it to the upside. So this is very important, and therefore, as you can see, there is a little bit of a bullish, component on my analysis here. Even though we are in a down climate, given the fact that it's not confirmed, and we have this green UFO here, that's actually quite bullish. And finally, to conclude, notice that we are looking at the implied volatility of the calls and the puts. The blue line is the implied volatility for the calls. Okay, calls IV. The gray line is the implied volatility for the puts IV. And notice how the blue line is above the gray line. Okay, notice how the blue line is above the gray line. Actually, this happened since that moment in time. Okay, and we are above that price point. So since that moment in time, we identified buyers are in the market. Before that moment in time, okay, you may go actually all the way to here, okay, because here it's not clear there was a crossover or not. Okay, so you may go all the way to here. So since those times, there were buyers in the market. Before that, notice how the gray line was above the blue line. There were sellers in the market, and no, that's why the market was falling like crazy. But from that moment in time, there are buyers in the market. We see that by observing options prices. We are not analyzing the candles like I've done before. I'm not doing technical analysis here. I'm looking at options data, call IV and puts IV separately, and I apply some sort of an algo, and that gives me the reading of the blue line is above the gray, which means buyers are in the market. So in other words, if I am right, and this climate is going to change to blue into tomorrow because the market either gaps up and run, or gaps up, comes back down, kisses the UFO, and goes back higher, and therefore, 1 day or two from now, we have a blue dot here, okay? If that's the case, so we are set for potentially another continuation, another relevant move to the upside, potentially a new Elliott wave turning point to be created, and the S&P may project its price movement to a new level, which could be this one. So I'm just getting the wrong place here. Maximize this. Right there. Okay. So you got it. Okay. So those are price projections. Okay. Where, if the market goes back higher, having a little bit of resistance there at these price levels is definitely something to expect. But I would say probably we're going to be headed towards 430 or something like that. That is something I would see as very much doable. Anyway, with all of this said, this is the end of the market analysis. It has been my pleasure to conduct the session. I have to say, you guys have been a little bit shy today. So that may mean that many of you are actually watching this recorded today. So if that's the case and you have questions, sorry about that. I just want to bring in my email address one more time. So that way, if you have questions, you can contact me and get your questions answered. So you can trade well, you can trade with confidence. Because obviously, if you have questions and no one is helping you to get the answers, then that's not good, isn't it? So as I said, my pleasure. Thank you for joining me, Tiger Brokers. Thank you so much for organizing these sessions. This is very powerful for the whole community and very kind of you. And for you all, thank you for attending and for appreciating what we do. And for the ones of you who are clients, special thank you. And for ones of you that are not clients, what are you doing that you are not client yet? Go take a look at our website. There are many tools, such as, you can register for a course, for example, and you get access to our tools for free for 3 months, things like that. Go ahead and take a look because there are plenty of tools that could make you a better trader or help you in your trading journey. Take care. See you soon. See you in the next one. Bye-bye, everybody.